Good morning. It is March the 17th, 2017, St. Patrick's Day. For those of you that have an Irish heritage and are those of you that like to go out and have fun on St. Patrick's Day. So pretty convenient having it on Friday this year. So enjoy yourself this afternoon. Start with our usual disclaimer. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact of any of certain market factors, such as a lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Okay, today is quad witching hour, and as usual, there's an imbalance to the call side. There always is. And that usually leads to early selling in the stock market. If that is the case today, it should take us higher. So we're going to give ourselves a little bit of room right here. We're going to go 23, 27, sell 1, 31 to 03, sell 2. Resistance starts at 22 right here, this area. So I think we can get a little bit, just right up to the upper edge of it. Maybe test these single prints right here, double prints. And that's the idea. Call imbalance, freeze the calls in their losing positions, make the puts feel happy, take it down, and then freeze the puts, and make the calls think they have a chance to make some money on it. And typical expiration. JP Morgan's quants are pretty excited about this, saying that volatility comes back today. So we'll see if that actually happens. It'd be nice to have more volatility in the E-mini. There's also articles out there that the shadow state, the secret state, is going to take Trump down through a big sell-off in the stock market. Now, historically, the presidential election cycle runs the market up into the election to stay in office. Once the election is settled, stock market goes down because they lose that government stimulus 2 years before the next election. Government turns on the spigot again. Why? To stay in office. You know, that's the politician's biggest job, is to get reelected, and so on and so forth. So we'll see if that plays out right now. The stock market could use a little, definitely some sideways movement for a while. And from a trader's perspective, we'd like it to sell so we can get some more volatility into the E-mini. When the E-mini does sell, we have volatility. So this morning, if the E-mini does sell because of option expiration, then we got a chance for the treasuries to trade higher. Okay, support is right against 16. So 12 to 16 is support. 13 to 17 early is buy 1. Then 5 to 9 will be buy 2. News this morning. IP up 0.2. Manufacturing IP up 0.3. Capacity utilization 75.4. Atlanta Fed business inflation don't know. Last was plus 2%. That seems reasonable to me. Consumer sentiment 97.2. LEI plus 0.4. Baker Hughes rig count, we had 768 domestically, 1083 overall. Could be a little higher domestically anyway. So 1083 was previous. With oil prices coming down, you might see Canadian rigs slow down. Okay, industrial production, consumer sentiment, direction of ES. And the direction of the E-mini probably rules. Looking at the 30-year. Okay, we have these single prints right up here. We have that P, so 4 to 8 is number 1. $11 to $15, sell 1. And $19 to $23, sell 2. On the buy side, the breakout came from 26. So 24.28, number 1. 17.21, buy 1. 9 to 13, buy 2. All the action is in puts. Very little call buying going on right now, so the industry is hedged. Gold was up a little bit last night. Came back, got right into our desired sell zone, and we're going to find ourselves there again this morning. So again, we'll make 33.35, sell 1. 38.40, sell 2. On the buy side, 25.27, buy 1. And 20.22, buy 2. Euro was up overnight. And when you look at the trade balance dropped quite a bit for the EU on this report. They don't like that. The objective is to export. Europe's always had a mercantilist policy, just like Asia does. It's a materialistic philosophy. When you look at all the conquests and conquering of countries, it was done to move manufactured goods from your country to your colonies and exploit the raw materials if they had any. So last night we had a 108.25 sell. We did get higher in London, and then we have this new move starting this morning right out of the middle, headed down. So 107.75, buy 1. I really don't like the long side, but that's going to be the first little band of support. See those 2 points right there, then 107.50, buy 2. On the sell side, structure-wise, 108, 108.25. Now, just because we like the short side of the market doesn't mean that the euro can't rally, and it does rally on a regular basis. But usually if you wait a day or two, then sell it. It's been a very, very effective strategy for us because the central bank wants the euro lower so they can export outside of the European Union. And again, that doesn't stop it from rallying for a day or two, but it's usually that's been a great trade for us. Okay, you should be in the May contract today. The May contract premium to April was 50 ticks. Half a buck, that's about right. Normally it's around 50, 40 to 50. If there's an anomaly that's greater than 70, and that usually reflects a bear market. So here we are at resistance. 49.50, 49.75, sell one. The contract expires on Monday, 50, 50 and a quarter, sell two. On the buy side, 49, 49 and a quarter, buy one. 48 and a quarter, 48.50, buy two. And the E-mini. Okay, it is option expiration day, and they try to freeze both sides of the market into losing positions. This is the game. And the option market maker makes the most money. If we expire at 75 today, the put action is 22.50. The call action is at 2400. So 23.75 is kind of where we've been trading. Right in here you can see where the split is. So probably have pretty darn good support at 23.50 and probably pretty good resistance at 2400. So it's going to be a fairly safe bet that we expire below 2400. So the issue is where, and the 23.75 will put us right in the middle of the 2400 and 2350 puts, 2350 puts and 2400 calls, which is where the play is. So we'll anticipate a close at 23.75, and on our option play that we've had since 21.25 or 21.50 would be the first strikes that we would have bought. The last position loses. We took profits at 2400 when the market was at 2400 on that last option, and we rolled to the 25s, and those will expire worthless. And in that strategy, the last option that you own always expires worthless. So that we had a hell of a ride. Okay, looking at the market right now, we've got resistance at 80. I'm guessing the first move is down because of the call imbalance. So that's what our play is. So we'll make 79s, 81, sell one. 84, 86s, sell two. Going to give it a little bit of room to the downside, so we'll put 70, 72, buy one. 65, 67, buy two. And we're looking for expiration right there at 75. So 75 plus or minus 5 points. If we have a quiet day, would make support at 70 and resistance at 80. So that's our play. Industrial production plus 0.2. Manufacturing up 0.3. I don't have a strong feel this morning. Capacity utilization 75.4. I'm guessing that manufacturing could come in higher. But again, I don't have a strong feeling. Atlanta Fed plus 2%. Seems reasonable to me. Consumer sentiment 97.2. It had a drop last time it came out, so that one could come in a little lower. LAI plus 0.4. No one pays any attention to it. And Baker Hughes rig count 768 for the U.S. 1083 overall last week. Could see this number drop because of oil prices, and you can see this number go up. Focus, industrial production, consumer sentiment, option expiration. Okay, it's going to take a bit to get everything up and published. I'm going to get busy on that. I will be back with you as soon as possible.